and welcome out to Maverick Currencies. Corey Halliday here with you, and tonight we are trading live the RBNZ rate statement. So the expectations here are that they're going to raise rates and a pretty good sized basis point, 50 basis point rate hike. In fact, let's come over and take a look at that together. So here is the expectation. We currently are at 1.5 on the central bank rate, expected to go to 2, a 50 basis point hike. Now, generally speaking, the rate hike expectation is priced in. It's expected. It's kind of telegraphed, but that's not always the case. Certainly in the U.S., the Federal Reserve does a pretty good job of kind of saying ahead of time what the rate's going to be. Other central banks around the world don't quite do that quite as much. You know, sometimes you'll get a shock and a surprise. They raise by a little more, a little less than the market was anticipating. Maybe they didn't telegraph it quite as well, but it's usually this, generally speaking, that's the bigger mover. It's more about this statement. It's more about the forecast going forward. It's more about what the market's going to price in that's not already priced in. So the market already knows that they're going to hike rates. You know, the only debate is how much, right? So you can't kind of go the simplistic, well, the Kiwi has to rally as soon as they hike rates. You know, that should be good for the currency, but since it's already known, it's already been getting priced in, right? So they're already, it's kind of the unknown that becomes known moves it. And that's where this becomes important because it might shed some light on when the next hike is going to be and by how much and so forth. And that's more of what's going to get priced in. So what if they come out with the hike as expected, but they send a signal to the market that they're not likely to hike further for a while or something to that effect? Well, then the Kiwi would probably sell off because, again, it's that future outlook that's most important. Now, where does that bring us as far as the Kiwi is concerned? Well, it's had a little bit of a rebound in terms of price action. If we go to the daily chart, for example, and just kind of look at the Kiwi versus a variety of different currencies. This is against the CAD, and you can see it's in a rally for a few days here. This is against the Swiss franc. It's sideways the last 5 days or so, been in a downtrend. Most of these are in a downward trend, mind you, in the Kiwi. Now here's Aussie listed first, so Aussie's stronger than the Kiwi, but do you see how everything's stronger than the Kiwi? Here's pound Kiwi, and again, it's in a little bit more of an uptrend. Here's Euro Kiwi, more of an uptrend. And here is Kiwi against the yen. The Kiwi's in a downtrend. Here is the Kiwi against the US dollar in a downtrend. So what's the point? Well, the point is the Kiwi's been in a downward trend versus every other currency on a daily chart basis. So over the past few months, the Kiwi not so good. Over the past couple of weeks, the last 10 days or so, it's been acting better. It's been rallying somewhat. Now, most things against the US dollar have been doing well. We talked about this in the midweek, the last 2 weeks. I really had the right call on the US dollar and sort of the wrong call on equities. Well, I wouldn't say the wrong call, but equities have gone sideways instead of higher. I thought equities would be a little higher than they are, but I definitely thought the US dollar was going to go down. And I'm not going to rehash that whole thesis, but the dollar has been weakening against virtually everything. If you look at the US dollar against the yen, see how it's been sliding lower the past couple of weeks against the euro. Euro's been really strong. This speaks to US dollar weakness. Pound has been stronger than the US dollar. Australian dollar has been stronger than the US dollar. Kiwi has been stronger. US dollar's been weak compared to the CAD. So the US dollar has been weaker than everything else the past couple of weeks. And that I really, really expected. So that's been a very good tradable instrument. Hopefully everybody's was kind of on board with that, and it made sense to them. I think in terms of the price action and the expectations and such, that the U.S. dollar probably has a bounce in the short term. And the reason I bring this up, you know that I've been a dollar bear. I've been expecting the dollar to weaken, but take it against the Aussie, for example, or against the euro, for example. You're getting to levels where the euro's been on a huge run higher versus the US dollar. Now we're up at the upper Bollinger Band. So the US dollar has weakened significantly the last couple of weeks. My expectation would be that this starts to kind of roll back over, and then yeah, we probably will see more. Probably will get a little bit more out of it, but that's, I think, a lot of the dollar weakness has now kind of, at least the easy money has been made. Let's put it that way. It's not to say the dollar can't go down further, but the easy drop, the easier way to trade it to the downside has played out. So now we got to go to the next step and say, okay, well, what do we like? We're trading Kiwi tonight, and dollar would have been the obvious choice, but again, I kind of feel like that's played out a little bit. So what do we like? Well, Euro's been really good. If we go Euro Kiwi, that doesn't look bad to me, and that's one of the most, kind of set up for a rally. You had a nice hammer candle here. We've been pivoting to the upside. We're in an upward trend here. We've been in a little pullback and just starting up out of that. I really like, if you think the Kiwi's going to go down, I think the one that's at the top of my list is probably Euro Kiwi on the buy side. So that one I'm going to be watching for upside move. If I think the Kiwi's going to be weak, then I'm going to probably buy Euro Kiwi on the long side if I play Kiwi to the downside. Now, if we want to play Kiwi to the upside, the Swiss franc versus the euro, a lot of times the Swiss franc is, if you look at it from the standpoint of, how it trades with the euro, it doesn't always have perfect correlation and whatnot. That's another one that I would say is like the euro, in that if you prefer trading the Kiwi to the downside against the Swiss franc, I'm okay with that. Same concept. Either way, you're getting short the Kiwi. So if you want to play euro to the upside or Swiss franc, both look pretty good. So I'm going to agree with your comment there, Alex. Either one of those against the Kiwi to the downside. But if we look at it, so I've been a proponent for CAD as well. I've thought, this was not so much a recent call, but over the past month or two, I've really been trading in equities, the energy sector, to the upside, and have really liked oil and those trades. And I don't think that's done, by the way, but that's been part of my thesis for the CAD to go up. Well, the CAD recently has been trading sort of poorly. Let me show you. This is Kiwi CAD. So you can see that Kiwi has been rebounding versus the CAD over the past, 10 days, something like that. If we were to compare it versus the Aussie against the CAD, Aussie CAD is just pretty much sideways. Not a whole lot there. So that speaks to, just for these last handful of days, the CAD has kind of come off. And I think, everything needs its time to kind of take a little bit of a breather. If we look at currencies on an individualized basis, if you're looking at the CAD, well, it goes on a run and then it needs a correction, and then it can go on another run and then it needs some sort of correction as an individual currency. So a little bit against what I've liked for a number of weeks, but I've kind of been on board with rotating back to, a short CAD. So it makes sense to me that if you wanted to go long Kiwi, you could play the Kiwi for a trade, and I think it'll kind of get up here towards that upper Bollinger Band. That's kind of, it's about 100 pips or so ish to the upside, and for a short-term trade, makes sense to me that we can continue to play the Kiwi to the upside, and probably the CAD is the way to do it, because again, I think it's been a little bit better currency than against the Aussie. CAD's got a little bit more weakness. If I come into the 4-hour, I was looking at this earlier, and it looks like a good setup to me as kind of an ascending triangle. Do you see that? Where I think, again, Kiwi goes higher versus the CAD. So if I'm playing the Kiwi to the upside, I'm actually okay with trading Kiwi CAD. And so those are the pairs that I really have in mind. I'm going to play, for me, it's probably this pairing that I'm going to buy if I want to play Kiwi to the downside, right? So I buy Euro Kiwi, or if I want to play Kiwi to the upside on this event, and we'll see how it reacts. But if we go Kiwi CAD, I would again buy, because of the way this pair, now Kiwi's listed first, so I would buy this pair. So this is my trade if I want to play Kiwi up. This is my trade. This is my pair trade if I want to play Kiwi to the downside. That's how I'm seeing it. That's what's going to be my outlook. If I go to the 4-hour chart on Euro Kiwi, again, it's reversed trend, been in a little bit of a pullback. I still think, this is one that's kind of working its way higher. Here's the 1-hour chart. You can kind of make an argument here for a cup and handle type of thing. The chart setups and the dynamics here really kind of make sense to me for those trades. So let's see how the Kiwi reacts. It's coming up here in just a couple of minutes. And as always, I pretty much get my orders ready. Now I do this on another screen. I don't know what it's saying there, but let me just create a hypothetical. I could create an order. Whoops, it's down here. So let's do a pretend one here. And I'll just throw in some numbers just so it works. And this would just be to be prepared. And we'd say, okay, well, what if we wanted to buy here? If you wanted a target order, throw it in up there. That doesn't matter as much as maybe the stop loss. Now, if I was doing that, I wouldn't do it off of the 5-minute. But something like this, where maybe I'm buying, let's see what, I'm just going to move that stop right under that low. And this would have you risking 166.40-ish on the buy side, 166.02. You're going to be risking somewhere in the neighborhood of 40 pips or so, 50 pips. Something like that makes sense. So you could have the order ready and actionable on both long Euro Kiwi and, maybe you're trading 2 lots or whatever you're trading here in size, but just have something ready to execute because, and I would oftentimes even put this buy order a little higher, kind of what's the most I'm willing to pay. And then if we see some choppiness and we're like, this is the one, all I have to do is slam the transmit order and away we go. So it's already moving here in anticipation. But as the announcement comes out, it's almost like it'll gap. And it's possible the news is already out, but you should almost see it make this huge jump. That speaks to energy. If we get an energy spike, it will blast. So let's kind of see. Right now, Kiwi, Euro's strengthening versus the Kiwi. This is the Kiwi's weak. This chart going up is Kiwi weakening. So that would kind of lead us more towards the Kiwi CAD trade. Or pardon me, it would be this trade to buy. So there it goes. And we just hit the announcement, I'm guessing. According to my clock, it's still a little premature, but they don't always wait for it to come out on the hour. So pretty wild kind of price action here. you can see the burst, and then you can see it give it all away. And that's pretty. Now we would switch to Kiwi CAD. And if you want to play Kiwi to the upside, which I think is the trade, that's the one. So you'd have a buy order here ready and set on Kiwi CAD and then ready to take action. Now I have not transmitted, moved a little slow there on my other screen. I didn't transmit, but that's the trade. Buy Kiwi CAD. Turn to the 1 hour, and you can see it kind of breaking out here. And for a stop, I think you're going to want to stop. Whoops. I need to change my presets. Let's just put it in here. Just put in a number just so it works. You're probably going to be risking stop down there at 82.34. I mean, I'm okay probably buying somewhere in the 82.70s. I think this will have some choppiness to it. It took off a little bit, and that's why you want to have these orders ready. If you were quick acting, you could almost have transmitted that as you saw the reversal. When I kind of spotted it, well, it had already kind of shot and was zooming right there. So I don't know that it would have filled my order if I'd have hit the button a moment sooner or not. But anyway, you slice it. I didn't get an execution. But I think in here in the 82.70, 5-ish range, and then stop in here could make sense. I think this is the trade, though. Kiwi strength, Kiwi upside, which I would like to trade it versus CAD. You can see it's breaking out, and it should. What normally happens in these circumstances is choppiness. It's probable that you break, but you'll probably have another candle that'll just kind of zoom down here a little bit and be a little choppy, and that'll be your opportunity. It shouldn't really come back and give away all of the upside, but it could easily spike in here to 82, 78, 82, 77, something like that temporarily, and that's kind of what we would be looking for. So good question. Could you buy it up here at 83.11? You can, but if I were doing that and feeling like I'm really kind of chasing it a bit, I would go half position size, because you'd want a wider stop loss. You'd kind of say, do I really want to have a stop in here that's likely to get triggered? I would do it in one of two ways. One, you could have a smaller position size, and two, you'd probably just be more quick to take profits, because most of the time it's not just going to go and go and go. Most of the time there's going to be some bumpiness to it, and you can use that little choppy, what we call market noise, just choppy behavior to maybe trigger into the position rather than getting stopped out. And that's what we'd be looking to do. So yeah, Kiwi CAD, I think that's the trade on the upside. So that's the one that I'm watching and looking to take action on. Now let's jump over and just see what the actual news was here. So if I refresh, let's just refresh here. So they did raise to 2. No major surprise there. Kiwi is strengthening in the statement. They probably gave a sense that they're concerned about inflation, that they're ready to combat that. That's kind of the message that most central banks have had, is that, look, we're going to be hiking rates for a while. Inflation's a real issue around the world and such, and it's something they're going to have to deal with. So I think they probably relayed that message and should be tradable to the upside here for a period of time. The more it kind of stays up here, if you just kind of continue to stay up here, stay up here, stay up here, it becomes less exciting to get in on the price overlap. The more you stretch up, remember, my philosophy is one that, okay, we have a huge size candlestick, great. Well, let's use price overlap to get in. So you break the candle into 4 segments. And if I break it into 4 segments, it's this segment right here. Not the very top fourth, but the second fourth. That's the buy zone. You don't really want to get in on the third or when it gives it all away. That speaks to it's too weak. That's not something we want to see. But choppy price action, you have this big candle. Usually the next candle will kind of wick down here and have a little price overlap with the prior candle. If this thing stretches too far up there, then we're going to be chasing to a certain extent, and I just don't think we have to do that. There's plenty of other opportunities. So I just, if I really, really love something and think this could really get carried away in one direction, fine. I could put on a half position size to capture that. But in this case, we'll stay a little more patient. But it's definitely it is a runaway. And you could see that energy. Did you? That's a good, valuable lesson that everyone can spot, because these are the events that you want to trade off of. So even if we didn't catch this one, that's okay. You can learn from this. You saw that energy burst. The first rally was kind of it's okay, and then all of a sudden you saw the energy burst where it gave away the gains and there was this pop to the downside. That's what you're looking for. That's a real move. That's kind of that one of those energy pockets that come in, and that leads generally to more movement in that direction, which in this case is exactly what's happening. Had it been a little bit more choppy initially, I think we would already be in this trade. But we'll leave it there. If you have any additional questions, anything, don't ever hesitate to ask, and we will see you all next time. We'll see you actually tomorrow in the currency midweek. We'll see you then. Good night, everyone.